My name is Sam Rosenthal. Welcome to the White Collar Crime Report. Every year, millions of Americans begin to undertake the annual ritual of preparing their tax returns. While most Americans are honest in reporting their earnings, others may be a little less than truthful. Tonight, we'll discuss tax fraud and other financial crimes. To explore this topic with me are Brian Mass, a partner with Beldock, Levine, and Hoffman Attorneys of New York City, and Leonard Rosenblatt, former Assistant U.S. Attorney, currently in private practice in New York City. Welcome, gentlemen.
Hello.
Brian, tell me a little bit about yourself.
Well, Sam, as you said, I'm currently a partner in a law firm in New York, Beldock, Levine, and Hoffman. My practice focuses primarily on representing people who, for want of a better word, are accused of what's called white-collar crime, financial shenanigans. Before that, I was a federal prosecutor in Brooklyn for 6 years, prosecuting the same sort of people I now represent, working on areas of tax fraud, white-collar crime, defense contractor fraud, insurance fraud.
So on one hand, you were prosecuting them, now you switch to the other side, defending them.
I learned when I was in the government the types of areas that the government looks at, and I've used that now, and I now represent people who the government has chosen to investigate and possibly prosecute, and I help people deal with the government in those situations.
Len, tell us about yourself.
Sure. I've been fortunate. My practice is entirely representing taxpayers and what I'd like to call problems. I don't do any tax advice, and I don't represent people in preparation of tax returns. But when they have problems with the Internal Revenue Service, which are either of a criminal nature or a civil fraud nature, then I'm in there and confronting the Internal Revenue Service or the Department of Justice if it's a matter that goes to court.
So you're a civil and a criminal tax lawyer. What distinguishes civil fraud from criminal fraud?
Well, unlike street crime, I mean, the Internal Revenue Service crosses both of those lines, and you have a civil function which can result, if something goes wrong, if there's a problem, or if there's an accusation, in very serious civil penalties. And for the same conduct, somebody can find themselves being indicted, and there are people who are serving jail sentences for tax crimes. We hear about them, we read about them, and it's part of our tax system.
So people don't go to jail for civil crimes, but they go to jail for criminal crimes.
That's absolutely correct. And what's unusual about the tax area is that the conduct can be exactly the same.
For instance, what do you mean by that?
So that there can be, for example, a problem with a tax return and a deduction on a tax return which has no basis. It could be fictitious. It could be just.
Such as what? A person claiming their dog is a dependent?
It's not. That could be one, but
okay.
that's far-fetched. But it could be a deduction taken for the purchase of a piece of equipment which was actually a trip to Europe.
Okay.
Could be something like that.
Another example, we were talking about it before we came out here, the area of not filing tax returns. Mm-hmm. There is a federal statute that makes it a crime not to file a tax return. Generally, it's a misdemeanor. But there's an entire program in the federal government of voluntary compliance where they're trying to encourage people to file tax returns, and there are many people, literally thousands of people, who, for reasons of their own, chose not to file tax returns for years, who, because they now choose to do it without the government coming after them first, are avoiding criminal penalties. So there are people who are going to jail or being severely punished for not filing at the same time that other people are able to make their peace with the government for the same activity.
So these are people who haven't filed in years, and they decide for matters of conscience or matters of economics that they're going to voluntarily step forward, step to the plate and file these returns. They don't go to jail. What about the tax they owe?
The tax they owe, the peace that they have to make with their government involves filing their tax returns, reconstructing their tax returns, and generally paying some agreed upon amount that they enter into through negotiations with the government.
Can you go to jail for not paying your tax?
Yes.
So not paying is a crime as well?
Not paying your taxes is a crime. What's unusual about the Internal Revenue Service's policies is rarely do you see a prosecution. And Brian, I don't know if you've seen one in years and years and years, but rarely are you going to see a prosecution merely for not paying.
So not paying, I've never seen.
So although not paying is a crime, you rarely see prosecutions in that regard?
That's correct, and it just happens to be my opinion, and I'm trying to get some information from the Internal Revenue Service now that's going to be one of the new focuses of the criminal enforcement program of the Internal Revenue Service.
You think they're going to step up their enforcement of these failure to pay requirements?
I think they're going to have to. I think what's happened, especially in situations where people have withheld payroll taxes and haven't paid it over to the government, is that the government's going to have, the Internal Revenue Service, that is going to have no alternative but to bring a few prosecutions for failure to pay in order to remind business people that there's an obligation to pay these taxes over to the government. It's a terrible problem.
And it's a problem of remitting payroll taxes as opposed to the problem of income taxes that are incurred on earnings. Is there a difference?
Well, is there a difference? Yes, there's a difference. Income taxes is something that we all know you owe at the end of the year. It's a percentage of what your income is, in essence. Payroll taxes, on the other hand, is money that you are holding in trust.
Well, these are monies the employer has withheld from the employee.
Everybody has withholding. Employees have withholding. That money goes into the bank account, usually, or remains in the bank account of the employer and supposed to be turned over to the government. So it's not the employer's money. Never has been.
So it's those employers who aren't remitting funds that they've withheld. Those you believe may be prosecuted for failure to pay.
I think that problem, especially in this region, in this Internal Revenue Service region, has grown to such an extent that the Internal Revenue Service may, for really the first time, have to step up, as you say, up to bat and take a few swings.
You're a prolific writer, and in the Legal Times recently, there's an article regarding the naked assessments of the IRS. And I want to quote something from the article. It says, tax litigation would be much less profitable for practitioners if the IRS were required to prove that its determinations were correct. Now, being practitioners in the litigation area, what do you mean by that?
Well,
you wrote it. I'm going to let you go first.
All right. I enjoy the writing. And, what that means is you have to, in order to understand tax fraud and in order to understand any basic American tax system, is that it's the reverse of everything we know. Lawyers are used to going into court and having to prove something. When you're dealing with the Internal Revenue Service and you're defending a taxpayer as a private practitioner, such as both of us, you have to be prepared to go in and prove something to the Internal Revenue Service. The Internal Revenue Service has to do nothing. The Internal Revenue Service can take a position, say you're not entitled to something, and sometimes they may do that for some reason or on an arbitrary basis.
Well, that's totally contradictory to the rest of the criminal justice system. Isn't it the government's responsibility to prove that you're guilty?
But much of what the Internal Revenue Service does in this area is not criminal. I mean, what Leonard just discussed is not part of the criminal area. It comes up in the area of the government trying to collect money and arbitrarily setting an amount that's due. When the government steps over and does a case as a criminal case, yes, the general rules on burden of proof and reasonable doubt and the rights of the defendant apply.
Those all apply to criminal tax cases as well as other criminal areas.
But in the civil area, and one of the reasons that I suspect that I believe the IRS likes to deal in the civil area more than the criminal, is that they have the right to be arbitrary.
So they have a right to say, Brian, we think you owe us $100,000, and so pay.
And if I choose not to pay, then I have to go to court, and I have to fight them at my expense and bear the burden of proving them wrong.
And under what circumstances will they assess an amount of which they're uncertain? Is this a concern of people? Should this be a concern of our viewers? That the IRS will come by and assess an amount of which the IRS is uncertain and of which the taxpayer may not owe?
I think that it's a legitimate concern for everybody who's ever survived an audit. And it's more of a concern for anybody who's undergone a criminal investigation or even has been looked at seriously by the Internal Revenue Service and in order for them to make a determination as to whether they're going to proceed to criminal investigation. Now, we're dealing with transactions and financial dealings which may have taken place 3 and 4 and 5 or 6 or 10 years ago or 20 years ago. And to ask somebody to prove something when documents may be unavailable, just lost, or who keeps certain kind of documents, puts taxpayers at a severe disadvantage. This is our system. This has always been our system.
Is the government overreaching?
The government has a great incentive these days to collect money. And much of the orientation that they have, whether it be in the voluntary compliance program to try to get people to file returns when they haven't.
Tell us what you mean by voluntary compliance.
Simply, what that means is that in the old days, when Leonard and I were assistant U.S. attorneys, if people didn't file their tax returns, criminal investigations were opened up and people were prosecuted. I prosecuted people, I'm sure Leonard prosecuted people, for not filing their tax returns.
So
now in 1994...
You prosecuted and put people in jail for not filing their tax returns.
And I'm not sure how many people went to jail. It was rare for people to go to jail, but they ended up with criminal records. They ended up being prosecuted.
So even if they were found guilty, it was rare for them to go to jail.
In that area of not filing tax returns, it was
But yet we
unusual.
all know about Leona Helmsley, who was found guilty and went to jail.
Leona Helmsley was found guilty not of not filing tax returns, but of not reporting a substantial amount, or actually of taking a substantial number of deductions that were not properly taken on her tax returns. And she had the misfortune of being prosecuted in the era of what we call the sentencing guidelines, where the judicial discretion in terms of how large a sentence to be given or light a sentence to be given has been to a large degree taken away from judges and is now the result of a arithmetic calculation, and someone like Leona Helmsley ends up in jail because she scored a certain amount on a chart.
I see. So do all criminal tax prosecutions which end in the verdict of guilty, do all of those individuals now end up in jail?
Well, I think that since the guidelines became effective, many more defendants in criminal tax cases, many more, substantial amount, will serve some sort of jail sentence. We're still not looking in a typical tax case at the 10 and 15-year kind of jail sentence that you have for armed robbery, for bank frauds, and other kind of crimes. But the answer is yes. If you're going to be prosecuted for any kind of moderate-sized tax case these days, you have to tell your clients, and lawyers have to do this, and it's something new, we're all learning it, that yes, the result of this, what you thought was an indiscretion, what you thought was just a problem that I'd have to pay back the money someday, is going to result in a jail sentence.
And what other ways does the government, or might the government, overreach?
In an area that's not strictly related only to tax fraud, one of the largest growing areas in law enforcement is in the area of forfeitures, which comes up in many areas of white-collar financial crimes, where the government, because it believes that a crime may have been committed, goes in and seizes somebody's property, somebody's business, somebody's
Before
resources.
anybody's found guilty.
Before anybody's found guilty, before any criminal charges are filed, and with a substantially lower obligation in terms of proof than they have in a criminal case. I've represented a number of people who have lost their property or have been forced to litigate with the government over their property where nobody was ever prosecuted.
What kind of property? When you say they lost their property, is this land taken away from them, or their houses,
well,
or their cars?
Here in Newark, we saw a number of used car dealers, not far from this very studio, who, if you drove into Newark, like I do on a daily basis, one morning the cars weren't there. And the dealerships were shut down because the government had obtained orders permitting it to seize these expensive cars, and these dealerships were forced to go into court and to try to get their businesses reopened.
And the government seized these cars before anybody was found guilty, merely as a result of some discretion on the part of not even a prosecutor, but some administrator at the IRS without a judge's consent?
With a judge's consent, but with a judge's consent in a much different way than in a criminal case. And a decision made by someone in the bureaucracy of the government, whether it be the IRS or some other agency, that rather than go and do a criminal case a certain way, they will do the case by seizing property. And as I say, sometimes doing the case only relating to the property rather than in a criminal case.
You described the seizing of business property. Is that also true of a person's individual property, like his house or his car or some of his jewelry? Can the government seize that?
I know a case just recently where an individual woke up one morning and the marshals were pulling his $30,000 car out of his driveway because that car had been purchased for currency, and you've heard about structuring where deposits or currency transactions were made in such a way as to avoid certain forms being filed with the Internal
But certainly buying
Revenue
a car with currency is not illegal.
That's absolutely correct. But if the Internal Revenue Service has a view, and there's statutes in the books and there's policies in the present government that makes the use of large amounts of currency very difficult and very risky, and even to the extent that people who are really unaware of the reporting requirements of large currency transactions are at a risk of having, at least temporarily, their money seized or that which they bought with the money, and such as a car.
On that note, we're going to take a short break. This is Sam Rosenfarb for White Collar Crime Report. Come back with us in another minute and we'll talk about tax fraud and how you can participate. Hi, this is Sam Rosenfarb for the White Collar Crime Report. Tonight's topic is tax fraud and other financial crimes. With me to discuss this are Brian Mass, attorney from New York City, and Leonard Rosenblatt, practicing in New York City as well. Gentlemen, thank you. Right before the break, we were talking about the hazards of buying merchandise, specifically cars, with currency. And you said that that could lead to forfeiture. Explain that again.
Well, this has been really a 10-year process, but I think we're seeing the height of it. Currency transactions and the problems that currency can create for innocent, sometimes very innocent people.
Sure, there's nothing illegal with using currency.
The government prints it.
Right.
They expect you to use it. But if you use it in a fashion which somehow they feel is inappropriate, they want it back.
Oh, well, how can we tell whether
it's long been requirements that if you're going to deal in substantial amounts of currency, and those substantial amounts are basically a $10,000 cutoff, is that certain reports have to be filed with the Internal Revenue Service. And so, for example, if you go into a bank and you make a $12,000 deposit in currency, and the currency can be from a completely legitimate source, it could be unquestioned. It's just perfectly legal cash.
You may have sold your car for $12,000 in cash and gotten
you may have
$120, $100 bills, or
you may
12.
have paid taxes on it. It may be perfectly legal. You may have withdrawn it for some purpose and now decide to redeposit it. Mm-hmm. But the bank has to file what's called the currency transaction report with the IRS in Detroit. And that is used by the Internal Revenue Service as a lead for some further inquiry. And it could be an investigation or it just could be a simple audit question. But if you go into the bank and you don't want to have this result in an audit, and you make two $6,000 deposits, the government says that you're trying to evade these requirements, and there have been prosecutions of taxpayers who have done very little more than taken their currency and split it up into smaller amounts so they wouldn't have to file these reports, or the banks wouldn't have to file these reports.
Seems pretty onerous on the part of taxpayers.
What happened was that starting from the notion that because of the drug problem and other major criminal problems where cash was a big contributing factor, the government created a system which was intended to catch people using narcotics proceeds, and they set up such rigid rules that it ends up catching people whose legitimate businesses deal in cash, whose legitimate way of living deals in cash, and also taxpayers who have sort of institutionalized for themselves dealing in cash a little bit so that they have their small little petty crimes on the side, and that now gets caught up in the general process that has been set up on currency transactions reports.
Well, there is a huge underground economy in this country, at least that's been publicized. Every small business is familiar with this underground economy, not necessarily participates. What's your experience in representing individuals who may or may not be a target from the IRS as a result of the publicity resulting from the underground economy?
My experience, of course, is that most of my clients, or all of my clients, are poor, misunderstood businessmen who are being unfairly looked at by the government. But there's certainly, all kidding aside, from having been a prosecutor and having been a criminal defense lawyer, there's no question that there are many businesses who, in a variety of ways, have mechanisms that they use to skim money or move money away from the legitimate tax system. My suspicion is that it is a huge problem. It's one that's very difficult to attack.
But the question is, should that be should that be the focus of a prosecution?
Should it?
Should
What do you think?
If we're going to have a system which is based upon currency, essentially, and currency is legal, and I think even the Internal Revenue Service is going to have to admit there's going to be some non-compliance. Internal Revenue Service, I don't think, really expects 100% compliance. To what extent, when should somebody be prosecuted? If everybody's doing it, who should be prosecuted? How are you going to go about making that determination? I think that's one of the problems we have.
And in what way is everybody doing it? Let's explore that. What do you mean by that? Are these small businesses or these moonlighting businesses? Is the high school student who paints houses during the summer for currency, and he fails to report his income? Is that something that everybody's doing?
Well, I don't know, but is that something everybody's doing? I don't. Could be, and I don't think the Internal Revenue Service is particularly interested in that. But then again, we've had incidents in the last year where people have not been nominated because of problems with
Nannygate.
With Nannygate, correct. We've had that problem. And so
and that's in a situation where in the past the IRS hadn't prosecuted or hadn't even
there still
forced,
hasn't been any prosecution,
hadn't
but you have that on the front
compliance.
page of the newspapers these days. And currency, as we said, is on the front page. And there's one thing that Brian was beginning to discuss before, which is especially this time of year, is the area of how's the Internal Revenue Service going to have at the same time this voluntary disclosure program and prosecute other people for the same underlying conduct.
Tell us about that voluntary disclosure program.
What I started to say before, there is an effort that the government's making to encourage people who, for whatever reason, stopped filing or never filed their tax returns to come in and file. It's complicated and has various rules, and it's not something that people should try to do on their own, but there is definitely an effort being made to get people to come in and pay their money, file their taxes, make their peace, pay their money, get back into the tax system, and go forward filing their tax returns. At the same time, as Lenny just started to say, there's a law in the books that says it's a crime not to file your tax returns. Right. And I know that I find that
Seems incongruous.
I've had a number of people who, either because they've been afraid that they're going to be caught or out of a pang of conscience, come in for advice as to how to make this peace, what to do, and are convinced that they've committed some horrible crime and that they're going to go to jail. And part of what we do is work with them in working with accountants and preparing the missing tax returns and figuring out how to file the returns. And that does go on.
No, that's very true. Also, you have to understand that in many, many cases, representing taxpayers under criminal investigation with the Internal Revenue Service, or even at the audit level, when they may become the subjects of criminal investigation, we don't surface. We are hired and we are involved and we are leading the case. But in some situations...
You're never known to the IRS?
It is not known to the Internal Revenue Service that we are making the decisions, giving legal advice. And that's effective. That's effective. And in certain cases, the question is always asked of me, is it helpful if I have a problem with the Internal Revenue Service to hire somebody like yourself and for you to go in there and assist me? And in certain cases, especially if you're at the very early stages of investigation, the answer is probably not. Probably not.
Probably better for you to be behind the scenes?
Correct. And bring in an accountant who's experienced in dealing with the Internal Revenue Service, who has the courage to stand up to an Internal Revenue Service agent, which can be difficult for a lot of people, and make the right decisions and stand your ground.
So how do you assist clients who come to your office who haven't been indicted, who have tax issues, tax problems that hasn't surfaced yet at the IRS? What do you recommend to them? How do you help them? What would you do to somebody who said, I haven't filed my returns in 15 years and I know I owe so much tax that I can't come forward because I don't have the money to pay?
Well,
the first thing that you do as a lawyer in that situation is first go through with the client what exactly their situation is. It's often not what they think it is. It's often either not as bad as they think it is, or their situation is not as dangerous as they think it is.
Some people don't realize that just by not filing doesn't necessarily mean they owe tax.
And then what we do, what my practice is to get the client together with an accountant, go through the financial records, reconstruct tax returns as best as possible, and then file returns, file, if necessary, financial statements with the government, but try to work in a way that gets the taxpayer back into the system. It's not a foolproof system, and it's not something that you can do without good
criminal
advice.
prosecution.
Right. But
There's a risk.
Right.
Every client has to understand that. I think that's the best answer. Brian just said is the best answer when you're dealing with somebody who hasn't filed. Just to turn it around, what do you do with somebody who's filed returns, which are fraudulent, which are dangerously fraudulent, which omit 50% of his income, and he comes into your office and says, no, nobody's looking at me yet, or something else is going on, and as a result of this something else going on, the Internal Revenue Service may come into the picture and look at these returns. And these returns really can stand scrutiny. So you have a situation that's very different where you have somebody who hasn't filed, and when you have somebody who's filed a return, which is a fraud.
Why do you think the country's so fascinated with the Leona Helmsley case, where she's convicted of tax fraud and goes to jail? What's the fascination with that case?
Well, I think, first of all, there's a fascination with Leona Helmsley or Michael Milken or anyone who has lived a prominent, financially successful life who
There's a sense of
falls,
greed, overreaching.
who had, on one level, looked like they were living as pillars of the community, who had more than enough money, and yet who were exposed in one way or another through a criminal prosecution as having overreached. In Leona Helmsley's case, assuming that the allegations against her were true, that she had taken as business deductions personal expenses, the sort of expenses that everybody is supposed to pay out of their own pocket for renovating their own homes or other personal expenses.
Do you think
those were paid through her business?
Do you think if her personality were different or her public image were different, that she might not have been convicted?
I think the best that you can say is that there are many, many cases where personal deductions are taken as business deductions, which do not result in prosecutions. That is clear. And as to the particular circumstances of, as to why the Helmsley case ended up with a jail sentence, I think is very complicated, and it might not have happened at a different point in time.
Gentlemen, I want to thank you very much for appearing on the White Collar Crime Report.
Thank you.
Thank you.
Thank you, Sam.
This is Sam Rosenfarb for the White Collar Crime Report, and don't let the greed get you. Thanks.